Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, we try to keep it as simple as possible. It's not rocket science, and it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing in the stocks within the portfolio on a minimum of a bi-weekly basis, every 2 weeks whenever I get paid. But I pretty much do purchase or some movement in the portfolio every week. I do cover those movements in the portfolio on my Sunday portfolio update videos. So go ahead and check those out if you have not already. I do not have a paid Patreon account, so everything that I have on this account is free to see. I don't ever intend to have a paid Patreon account. We all have enough to pay for. Like I said, it's free to see what I'm investing in. But if you'd like to help out the channel, dropping a comment, liking the videos, most importantly, subscribing and hitting that notification bell does help out tremendously. I also do have a Webull link down below in the description. If you're looking to start your own investing account, if you use that link, you'll get some free stocks, whatever the local, newest promotion is. When you sign up and deposit funds into the account, I'll receive some free stocks as well. So that would be a way to help me out. You don't have to use my link. You can sign up without it or use any other service. Moomoo is another one I know people like. Several of them out there. I use my Ally Invest account. That's where my updates come from for my Sunday videos. I don't typically cover my Webull activity on this channel. It's more speculative in nature with much higher risk into stocks that don't usually pay dividends. And so I don't want to lead anyone astray and potentially into some highly speculative stocks. In today's video, we will be covering, it's that time of the month again, 4 stocks that I'm looking to be buying in November, maybe a buy for you as well. We will take a look at them. I can't believe we're already wrapping up October. There'll be one more day in October there on Monday to invest in, but other than that, the rest of the week, Tuesday through Friday, will be into a new month, November, quickly wrapping up the year. And we are going to be taking a look at Leggett & Platt, Intel, Verizon, and LyondellBasell. Let's jump right into the video. Now, the particular reason for these 4 stocks, 3 of the 4 are stocks that are down in my portfolio considerably. So I want to add to those, bring down my cost basis while these are down. There's been a lot of green lately. Actually, you can see the green here in the last couple of days, even in these, well, except for LyondellBasell, even in these stocks. Intel up significantly. This one is not down in my portfolio. It's actually up 8.35%. But it is a smaller position. I had sold out of this back when it was in the $40, and I'd like to add to it down here in the 20s. So I'm hoping that this stays below 30. Even if it goes a little bit above 30, I'll continue to add so long as my cost basis remains below 30. So Verizon Wireless down 21.7%. I want to bring this cost basis down, increase my yield here, and Leggett & Platt, same deal. I'm down 17.45%, so I want to decrease this cost basis, bring it closer to this 33.42. Again, I'm hoping that they stay down so that I can do that. LyondellBasell, same thing, and it's dropped even further. It's down another 5.46% on Friday. So I want to bring this 88 closer to the 78 where it is currently. And Intel, like I said, even though it is up, it is higher than my cost basis. So long as I stay down below $30, 32, 35 even, I'd be fine in there. Well below what I had sold this position out here earlier in the year. And first up, we will take a look at Verizon Communications, ticker VZ, out of the communications sector. 52-week range as low as $34.55, as high as $55.51. So you can see it is definitely closer at $37.67 at the close of business on Friday. It is closer to that 52-week low. So I want to maintain or try to catch it here while it's at this low. Average volume 22.6 billion. Volume on Friday was 31.8. So a lot of people jumping in here and buying, right? See a buying opportunity there. Market cap of 1.58 billion. Beta of 0.37, so less volatile than the overall market. PE ratio extremely low, 8.19. Earnings per share is $4.60. Next earnings date will be January 21st or 24th, I mean. Forward dividend is $2.61 paid out on the year. We'll jump down here. They do pay out quarterly, and the quarterly payment is 65 cents and some fractions of a penny over here. And a very nice yield at 6.93%. Ex-dividend date was October 6th, so you just missed that if you didn't own this or bought shares before then. And the 1-year target, at least according to Yahoo Finance, where this information comes from. I'm not affiliated, just where I like to look. They have a 1-year target of $46.24. Verizon also has a 55.5% payout. So I like that it is under, I look for anything under 75 I consider safe. That means that of the free cash flow, 55.5% of it is paid out in dividends. The rest can be reinvested in the company, pay down debt, to build out the company itself. And lastly, we'll look at the dividend growth. Doesn't have spectacular dividend growth. It is only 1.96%, but with a 6.93% dividend yield, I can deal with the lower growth, right? If it gets too low and doesn't grow, I don't like those kind of stocks in my portfolio. But I can handle a 1.96% growth so long as it continues to grow and it has a very nice dividend yield. Next up, we'll take a look at Leggett & Platt, ticker LEG. Who doesn't like a little leg? 52-week range, $30.28, as high as the low of $30.28, a high as $48.13, currently at $33.42, definitely closer to that 52-week low. So another one, again, I want to build this out a little bit more, bring down the cost basis, increase my dividend yield. Average volume, 859,000. Looks like Friday it was at 565. So actually a little down. I'm surprised it was up on the day since the volume was down. But sometimes that happens. Market cap of 4.43 billion, beta of 1.32. So it is more volatile than the overall market. And you can actually clearly see that, right? It was up on the day in the morning, dropped down significantly, and then kind of fought its way back throughout the day. But definitely more volatile than the overall market. PE ratio, another one that's pretty low, 11.69. Earnings per share is $2.86 per share. Next earnings date is coming up, October 31st. I believe that would be Monday. For a dividend of $1.76 paid out in the year. So it would be basically, they do pay out quarterly. That would be a 44 cents per share quarterly. And they have a 5.38% dividend yield. Another nice yield here. Ex-dividend date would be September 14th. And the 1-year target, at least according to Yahoo Finance, is $35.33. So they don't really see a lot of upside. And Leggett & Platt is, if I didn't mention that, is in the consumer discretionary sector. So this is one that usually whenever the market kind of is in a downturn like it is now, the consumer discretionary does have a pretty big lag and even loses significant amount of value, right? A lot of people aren't buying things that they don't need. So companies like Leggett & Platt would suffer a little bit. So that's probably why they're not seeing a significant upturn, and probably won't until the market kind of flattens out and starts to recover. Payout ratio is 59.90, so another one under 75%. And it does have nice dividend growth, 4.88%. Even with the high yield, it is still growing just under 5%. Next up, we'll take a look at LyondellBasell. LyondellBasell, ticker LYB, is in the materials sector. And they have a 52-week range as low as $71.46, as high as $117.22, and at the close of business on Friday at $77.99, obviously closer to that 52-week low. So again, want to decrease that cost basis in this one, build out this position a little more, increase that yield, excuse me, and potential future returns. Average volume 2.3 million. Volume on Friday was 5.1, so higher volume, but probably a lot of selling, right? That's probably why you had a 5% downturn there. Market cap of 25.441 billion, a beta of 1.26. So this one is also more volatile than the overall market. PE ratio of 4.74, very low PE here. Earnings per share is $16.44 per share. Next earnings date will be in January, end of the month there, 26th through the 30th, sometime in there. Forward dividend is $4.76. They do pay out quarterly. They pay out $1.19, and I'll show you why I actually clipped out a little bit more here on this one, not just the quarterly amount, to show you what it is. They have a 5.77% dividend yield, nice dividend yield. Ex-dividend date is August 26th, and then their 1-year target estimate, at least according to Yahoo Finance, is $87.40. So as I said, they are a quarterly payer. They pay out $1.19 per share. And it actually says their payout ratio is still below 75%, so we like that, even though it is getting up there high just below 60% at 59.50. And it shows their dividend growth here at 125.69%. Now this is a little misleading, and I'm going to show you why. Back here in June, they actually paid a special dividend, which is higher than their typical dividend. So they paid out $6.39 per share. And LyondellBasell does this every now and again. So their typical before this June payment back in March, it was $1.13. So they have increased their dividend to $1.19 per quarter. But this special dividend here made it look like it was a huge jump up. If you take out the special dividend and average out just the increase from $1.13 to $1.19, it's actually about 5% dividend raise, and that's in line with what they typically do. So this is really about a 5% dividend growth. But with the special dividend paid out here in June, it really makes it look like they, and I'd love them to be up paying 125% dividend growth. I mean, they'd hit 75% pretty quickly, but that's not really the case here. So this special dividend here kind of skewed the numbers a little bit. And typically, this is about a 5% growth per year for their dividend. But like I said, every now and again they do pay out a special dividend like this one, so it was nice to see $6.39. Who doesn't like a little bit of a bonus throughout the year, right? That's kind of the way I look at it. So that is LyondellBasell. That's number 3. And the last one, the only one on the list that I'm not significantly down in the portfolio. I'm actually up on this one, but I still want to build out this position. I only have 40 shares currently. And it is Intel Corporation, ticker INTC, out of the information technology sector. 52-week range as low as $24.59. I'd really love it to drop back to this $24.59, but it has crept up a little bit. As high as $56.28. So still closer to that 52-week low than it is a 52-week high, although their recent earnings, they really shot up after their recent earnings. I think a lot of people were expecting a lot worse numbers. They came in pretty well. Average volume, 42.34 billion. Volume on Friday was 91. So like I said, a lot of people, over twice the volume, right? Twice as many people said, "Oh, look at Intel. We want to buy some of this," especially while it's so low. Market cap of 119.972 billion. Beta, it doesn't show. I'm surprised by that, but it's pretty flat. So maybe it's just so low that it's not showing. I'd have to look this up somewhere else and see why it's not showing the beta. PE ratio of 6.24, so that's extremely low PE. Earnings per share of $4.66 per share. Next earnings date is in January again, the 24th through the 30th. Should come out somewhere in there. Forward dividend is $1.46 on the year. They do pay out quarterly. It's 36 cents and some fractions of a penny. I love whenever they throw in these fractions of a penny, but it's 36 cents basically. And they do have another one with a very nice yield, just over 5%, 5.02% yield. Again, it was a little higher than this one. It was back in 24, but anything over 3%, in my opinion, is very good for a dividend-paying company. Ex-dividend date is coming up in November, so on November 4th, as long as you buy this before the ex-dividend date, the day before, so you'd have to buy on November 3rd to be able to get the dividend, but it is coming up quick. And 1 year target estimate, at least according to Yahoo Finance, is $34.27. They have a lower payout than the rest that we saw, 44.20, and another one that has pretty nice dividend growth, just under 5%. So even though it has a 5% dividend yield, at least currently, still growing pretty nice at just under 5%, 4.89%. So we like to see the dividend growth, basically get to see your income increase, your passive income increase for doing nothing but owning and holding on to the stocks. So those are the 4 stocks that I am looking at, going to focus on in November. Probably some other ones throughout there as well. Whenever something presents value, there's some other positions I still want to continue to build out. Whirlpool is one that I was focusing on for October. Procter & Gamble, if it drops back down. Union Pacific is another one. So there's several positions in Vail and SBSW, 2 material companies. If they pull back a little bit, I'd probably add to them. And just watch where there's value in the market, where I can add to my portfolio. Existing positions within my portfolio is my focus right now. I'm not really looking to add anything, though I am looking at Ally Bank right now, and if it drops significantly or stayed low, I might look to add it to the portfolio. We'll see. But for now, I'm going to focus on those 4 positions and add to those probably every week and try to, like I said, decrease my cost basis, increase my yield, and increase my potential future returns. This is a picture from Saturday, the 29th here. Might let my dogs out, run around in the back. I'm trying to fill in some of these low spots with some of the dirt that the guys left for me. So I've been spending a little bit of time out back here. Thought I'd snap a picture and share with you guys. All right, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think. What are you doing for the month of November in your portfolio? What positions are you adding? How has your portfolio been doing? Mine has seen a lot of green lately, which is nice to see, but it's kind of a double-edged sword. I like to see the green in my portfolio, but it also is a little disheartening because I want to pick up more shares at cheaper prices. And as they return to fair value or above value, I stop buying in those that are above value. So I actually like to see the red. I know that's weird to say, but I like a sale. I like to walk into a store that I like and buy things cheaper. And I like to walk into the stock market and buy stocks cheaper as well. If you're into that kind of thing, if you're made a little different and like to see that red, go ahead and subscribe to the channel and join me on this journey to financial freedom. Hopefully you are on your own journey as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Come join me for my Sunday stock portfolio update. That'll be out tomorrow. And I hope you are having a great weekend. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing generally for educational and entertainment purposes. Investing involves risk and there's money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.